About the stock market, there's this on Google Trends. This phrase has been trending a lot, which is stock market crash 2021. And I just wanted to know what you think about it. I mean, I don't know what you think about the stock market situation right now. Just what you
Okay,
think.
so truly I don't know, because I'm not a soothsayer. I trade, we talked about earlier, trade what you see, and what
Yeah,
we see is those big money footprints. So
right.
that's what governs it. And by the way, if there is a crash, there's almost always, February 2020 was a complete anomaly. Normally when there's a crash, you get warning of it. You get warning of
Yeah,
weeks and months because the market
yeah,
becomes more volatile. You get more inconsistent behavior. You
yes.
get a bit of a dip. Then some really volatile stuff starts happening. Now it could be that that's already started. It could be, but we don't know yet. So
Just to
I
just to
think
interrupt you there, because Linda Rashkin said something about that. She said that the crash of 2020 was an outlier, in her opinion. She actually doesn't even call it a crash. She calls it an outlier.
it
Linda
was a complete
Rashkin, it's
anomaly.
the
It
yeah,
wasn't it
yeah,
wasn't
yeah.
how crashes normally happen.
Right,
Crashes
right.
normally give you an awful lot of notice, and also
Yeah.
what tends to happen in crashes is that my leverage indicator gives you real warning. There's something not right here. Hang on a second, guys. And it often will happen. Now, I'm not saying it's going to happen every time, but nearly every time when we've seen something very significant, it's been given us warning. Now, I was concerned about the Russell not long ago because the indicator was chiming then, but it wasn't on the Dow or the NASDAQ or the SPY in the same way. So it was like an inconsistency. But normally you're going to get a clear signal that, hang on, something isn't quite right, behaviorally in the stock market and also with the OVI. Now, what I would say is this. No one knows, and I would urge people to trade what you see. Now, if the market says bullish and you're fearing a crash, well, surely you have stop losses at sensible places. And if you do, you'll get stopped out without too much damage. So you can keep on trading what you see in that sense.
Yeah.
But if there's one person I think is worth listening to because gets it right uncannily, is Michael Burry, big short guy, right?
Oh, I know. Yeah, yeah.
Now, Michael Burry shorted Tesla right near its highs, and
Uh-huh.
he published it. And if you wanted to punt at that point, that was the way to do it. And it went down, $300 or something like that. Now, he recently tweeted, in fact, tweeted 2 days ago, people always ask me what is going on in the markets. It is simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. Hashtag flying pigs 360. That was his. I'm just reading it there. That was his tweet. So here's what I would say. From someone who is a very deep thinker and does deep, proper analysis, it would be
Is that
worth.
you or Michael Burry? I'm confused now.
Well, in different ways, both, but I'm talking about him.
Okay.
It is worth jotting it down somewhere that the game of musical chairs of this market is likely to come to an end at some point. Now, when it came to the real estate crash that he was predicting back in 2007, his timing was out because there was a lot of manipulation going behind the scenes, as per the film. And he was out by quite a long, and he made his investors very twitchy about that. But he was right, and he was right big time. Yeah. So at some point, my guess is that he's going to be right. Yeah. And there's going to be a real shit show as a result. So, but for us, it's trade what you see.
Yeah.
And here's what we see. Still, the market has been bullish, but it has been a much tougher market this year. And I'm talking about really from January onwards. This year, we've been plagued by false breakouts and steep retracements. And so the style has changed a little bit than last year, where from pretty much April onwards, it was really easy to make profits. I mean, literally easy. I mean,
That's right.
I did a run of, I don't know, it was only a few weeks where I thought, okay, I'm interested now. and I almost doubled my funds at risk in that time. And we're not talking about GameStop type stocks. We're talking about boring stuff. Okay, and I just did that for my my kids' account. So when you've got that situation, it's if you've got a good plan, it's easy. When it becomes more difficult and you see irregular behavior, then that's a warning sign of sorts. But it might take a while for his prediction to play out. And also, I've taken his quote to a few people. I take him to crypto people, and crypto people will go, yeah, but does he understand crypto? It's different with crypto. Now, no, it's really interesting to hear that, because that's the same language that happens every time. It's different this time.
Right.
Right? So, he's too smart to say you know better than him. And
I respect him. He's a very intelligent guy. I like the portrayal of him in the movie The Big Short. I think it was, who played him? Was it Christian Bale? I think played him. I like him. I do think that one of his predictions might turn out to be wrong. And I say that respectfully.
Which one?
Well, he's under the impression that we're heading towards inflation, but the way I'm looking at it, I think we're heading towards deflation. And in fact, I agree. I think that's the other way around. I think deflation and the next crash, the next depression, the next major recession, which we're heading towards, is going to be deflationary, not inflationary. Whereas Michael Burry believes that no, we're heading towards inflation. I think that's going to end up being wrong. But that's just my humble perspective. What do you think?
Well, I hope so. But I think that my take on it is this, and is if the supply chain can still function as it has done for the last 20 years, then it's difficult to get inflation in that environment. But what we are seeing in practical terms is the supply chain's been disrupted pretty badly. In Britain, the supply chain is broken because of Brexit. Whether you like Brexit or not, you're still screwed. You got packages not arriving, packages being late. I mean, try and order something. It's taking a lot longer now. And you're getting and you're paying duty on it, and you don't know why, and you won't get the package. So there are issues. I really hope that the supply chain will remain as fluid as it has been, because I think the world's a better place for it. And I think that's, I mean, remember, inflation again is about demand and supply equilibrium, isn't it?
Yeah.
And if supply is affected, then obviously there will be inflation. Whether this demand bubble can continue, I think is highly doubtful. And once that calms down, then that probably eases it. But I'm no economist, but I haven't believed about inflation for quite some time. If he's saying there's going to be, that's obviously a worry. But I do see that there are certain issues with the supply chain right now. Now, weirdly enough, I thought they would happen sooner, but they didn't. They took a lot longer to come through. I thought that when the COVID thing started happening, I thought that's going to be our, things from China are not going to get over. But I was wrong on that one. And let's hope he's wrong, because I think inflation is a scourge.
Yes, I agree with you on that one. Hey, Guy, listen, thank you so much for being as patient as you have. And guys, please do check out Guy's website. I'm going to put his website and his links in the description. Plus, check out his books, Option Made Easy, Volatile Markets Made Easy, and also his book, which I think is called The Bible of Option Strategies. That's a really good one. Definitely suggest getting at least the first one, Option Made Easy, and checking out his website. Thanks, Guy. I really appreciate it.